Welcome to Fintech, the Paradigm Shift Finance course. I'm Jisoo Kim from the Service Strategy team at KakaoPay, one of Korea's leading fintech companies. Let's begin for today's lecture, Recent Initiative and Issues in Fintech Regulation. There are a few keywords to note in financial regulation. From the financial crisis in 2008, financial regulations became very strict. It became necessary for financial institutions to know where the customer's money comes and goes, the concept of AML, and who their customer is, which is KYC. Simultaneously, development in technology also adapted into regulations to better support these changes, resulting in Legtech. All of those concepts are important to stress, but above all, the main question for the regulator in this era of fintech boom is how to regulate and foster innovation. So please understand that we'll focus on this topic for this lecture. Before we begin, the answer to that previous question is not that simple. As a regulator, he or she should consider financial stability and consumer protection, as well as innovation and growth. Both sides are critical, so balancing both challenges and risk is highly important. There are several ways to answer that question, ranging from market pull to regulatory push approaches. The first one is doing nothing, which can be seen as either permissive or restrictive. China, before the middle of 2015, is an example of this because it decided not to put in place new regulation. The other approach is regulatory sandbox. It is the playground for experimentation in a limited market context with limited regulation to test and learn. The last one to explain is developing a new regulatory framework to push the changes at the national level. Now, let's take a look at each in detail. In China, the market-driven approach led to significant growth in the fintech industry. China has ex-post regulation practice and a negative list system under which everything not forbidden is allowed. It is also minimized government intervention with no separation of industrial and financial capital and no market entry regulation on sectors where traditional institutions were dominating. Under this, China's fintech adoption rate reached 87% in 2019. The payment market size is around $98 billion, which is greater than the total global payments amount of both Visa and MasterCard. The total revenue of fintech market in China is expected to be $294 billion. However, China recently is strengthening regulations triggered by P2P lending fraud in the late 2010s. Yizhubao, once China's most prominent P2P lending firm, closed in 2016, having collected around $8.5 billion from more than 900,000 investors as a Ponzi scheme. This incident became a turning point to start tightening regulations in China. As a result, the number of P2P lending firms decreased from 6,000 to 343 in 2019. The total outstanding loan of P2P lending firms are also reduced to $70 billion in December 2019. As seen from this, regulators should have a room for flexibility in approaches to cater fast-changing environment. The next one is regulatory sandbox. The UK took an experimental approach of introducing a sandbox, resulted in increases in fintech funding. In 2013, the UK established FCA and first introduced a sandbox Cohort 1 in 2015 as a part of Project Innovate. With this, FCA set a fast, simple process consisting of application, authorization, testing, and exit process. Now, the UK became a global fintech hub with more than 1,600 fintech firms, and it is expected to be doubled by 2030. Also, fintech contributes significant amount to the total GDP of the country. It was possible due to the early success of sandboxes, Firms participated in the first and the second cohort of the sandbox raised a significant amount of fundings after the testing process. Similarly, South Korea designated innovative financial services under the regulatory sandbox from 2019. So far, there are 120 innovative financial services as of December 2020. And 102 of them are either launched or will be launched in the market by the early 2021. Also, 27 related regulations in this sandbox were adjusted in August 2020. With this heated participation, fintech startups raised $340 million of funding and more than 600 new jobs were created in 2020. Furthermore, more than 7 firms are planning to expand overseas. There are some examples of innovative financial services in Korea. KakaoPay allows customers to compare loans from multiple financial institutions in one search. Insurtech company Bomet provides an insurance calendar in which customers can buy an insurance product just like adding a schedule. Korean Investment and Securities let customers to purchase global stocks starting at as little as $1. Let's take a look at the last approach. Back in the mid of 2010s, India started to launch a significant intervention called Digital India to bring the underbanked population into the form of financial net. India launched GEM Trinity, the Prime Minister's People's Wealth Scheme, which we will discuss in the later slide. Along with this initiative, India's Tech was introduced. This is the set of APIs that form the building blocks to develop applications leveraging technology such as eKYC, authentication, unified payment interface, digital signatures, etc. Besides, the government proactively announced favorable initiatives such as tax benefits. Speaking more of GEM Trinity, it is the consolidation of 3 critical projects, which are Jandar, Adhere, and mobile connectivity. First project was to expand the bank accounts, and the second is to widespread the identity formalization with 12-digit unique identity numbers with biometric and demographic data. The third is to increase mobile connectivity. With this, India reached 1 billion bank accounts, 1.2 billion identification enrollments, and mobile subscribers, meaning they were ready for digitization. As a result, India peaked fintech adoption rate of 87%, ranked first with China in 2019. For funding amount, India even outperformed China with $286 million in the first quarter of 2019. Their digital payment value is expected to reach $140 billion in 2026. All of these statistics indicate that India is successfully leapfrogging into the leading position in fintech. So far, we have discussed several approaches to dealing with fintech innovation in different countries. It is hard to say which approach is better than the other because each case has its own unique situation and concerns. For example, just because India's fintech is growing fast doesn't mean that this approach is the right answer. Those frameworks in India were effective because it has a huge unbanked population. Again, it is back to the scale. In the end, it is essential to balance out between challenges and risk based on the context of each country. This is the end of lecture. Thanks for watching today.